What is up, guys? Stas here. Welcome back to another video. So the markets, they were crazy today. S&P 500 up 0.6%. The Dow Jones went up 1.4%. The NASDAQ 100 went down 1.4%. And the Russell 2000, get this, guys, unbelievable, went up almost 4% on the day. And today we're going to be talking more about the markets, breaking down some technicals, going over a bunch of stocks to buy now. And I also want to share with you guys what I did in the stock market today and in general where my head is at as a trader and as an investor. So if you find value in the video, hit the like button, subscribe to the channel, make sure to join the Strive Smart Discord chat and the Facebook group, and get yourself 4 stocks from WeBull and $30 from M1 Finance. All of those are free and linked right down below in the description box. So let's get into it, guys. S&P, the markets in general, were nuts today. You guys can see here the S&P 500 hit yet again another all-time high. All-time high was hit at 3783.04. And looking back, I mean, these past couple of days have been very volatile. You can see here a couple trading days ago, the S&P 500 and the markets in general, they collapsed, right? The S&P went from 3770 roughly. It shed about 100 points in a day all the way down to 3660. That was about a 3% drop in a day as well. And from that point, from that drop, and I've mentioned this before on the channel, and you can see it here on the 2-hour chart, we actually held a higher low, right? We actually held the uptrend that you guys are seeing here in the channel. And I told you guys a couple of videos ago, yesterday, I said, watch the channel. If we end up breaking, especially 3726, we actually mentioned that in yesterday's video. I said if we break 3726, which is an all-time high, was an all-time high from back a couple weeks ago, I thought there was a good chance the markets could go higher, and maybe we go up to the top of that channel that you guys can see on the 2-hour chart. And that's what happened. I mean, we filled all the way to the top. Now we're selling off a bit here. You guys can see on the 2-hour chart and on the intraday chart, we sold off a bit heading into the close of the market. From that all-time high, we dropped about 1%. So that is simply, in my opinion, honestly, a pretty healthy pull down. I mean, take a look here on the 5-day, 5-minute in the past 3 days of trading. Well, at this point in time, we're still holding the uptrend. We hit the higher high today, all-time high. We're pulling down, and we're technically speaking still at a higher low on this 5-day, 5-minute. So for tomorrow, watch out what happens here on the S&P 500, right? Right around 37.45, 40, 37.50, right around where it is now. Do we hold this point and rally higher? Do we end up hitting those all-time highs again, maybe breaking out and hitting a new all-time high? Or do we end up breaking 37.45 on the downside and maybe go back to test 37.26, maybe back down to test those lows from a couple days ago at 36.60? That's kind of what I'm watching here when it comes to the S&P. And we'll get to the NASDAQ 100 in a little bit here in a second, and we'll talk about big tech and what's going on with the Senate. That's pretty crazy right now. But before we do that, let's talk about the Dow. Dow Jones hit 31,000. It's crazy. Back in March, April, Dow was trading at what? 18,000, 20,000. I don't even remember. Let me double check. It was at 18,000. Now it's almost doubled. It's close. Not really. Not 100% there, but we're close. I mean, a double from 18,000 would be 36,000, so we're not that close. We're closer than we were back in March. Let's just put it that way. The Dow's up 66% from that low back in March. But anyway, if we go here on the 20-day chart, you guys can see we're very bullish. We actually broke out of that resistance we talked about yesterday at 30,500, and we didn't just break out of it. We blew right past it. We blew it out of the water. We hit 31,000 again, like I said, and now we're pulling back a bit, which is honestly acceptable. I think that's healthy, and I've said that before. When the markets go up very quickly, I think it's a healthy thing to see a pull down, and that's with everything really. Stocks, indexes, ETFs. If we're very overextended, hey, pull back a bit. I'm all for it, and that's what we're seeing here with the Dow, and you can see it even on the intraday chart. We ran up a lot, and then we pulled down a bit, but overall, even on the 5-day, 5-minute, you can see it. We're still holding the uptrend here from the past 1, 2, 3 trading days. If I extend this to the right, you'll be able to see it. So Dow went crazy, Russell went extremely crazy, and the NASDAQ went down. Why is that? Well, we have a lot going on right now. The NASDAQ stayed under pressure as the markets took, and I'm reading some notes here, guys, as the markets took the increasing odds of a Democratic sweep in the Georgia Senate races as a possible sign for more antitrust action against big tech companies. So there's a big fight going on in the Georgia Senate race right now, and that's going to become official, I believe, tomorrow morning, midday tomorrow. We should know, but the markets are already pricing in a Democratic win, and that is pretty good for the overall markets, right? We're probably going to get some more stimulus. Well, we are, right? We're going to see $2,000 checks, another big package, and we all know when there's money printing, that devalues the dollar, and that's good for the stock market, right? So markets in general, like we saw in the indexes, they're up, they're rallying because of that, but big tech is going down because, again, we are probably going to see a Democratic-run Senate and House of Representatives and the presidency. So that is not going to be good for big tech because they want to break down these big tech companies, right? Which is why we're seeing, again, the fall in the NASDAQ 100 in general, down 1.4%. And then if we take a look here at Facebook, it's down 3%. Aapl down 3.4%. Amazon down 2.5%. Microsoft down 2.5%. Netflix down almost 4%. And Google is hanging on, but still it's down 0.3%. So that is not great for big tech, what's going on right now, but it's good for the overall markets, right? And we'll get into that probably later on in another video tomorrow, the next day, once we get more clarity. But as of now, that's what's going on. And in general, in Washington, it's a pretty crazy time, especially right now when I'm filming. A lot of chaos out there. So we'll see if this affects the markets. It probably will. That is why it is very wise right now, in my opinion, to have some cash around, to ride out the volatility, because there's going to be some volatility coming up these next couple of days, in my personal opinion. And Russell 2000, guys, up 4%. That is crazy. This is also in response probably to that more stimulus coming and all that good stuff. That's why the Russell most likely is rallying right now. And thankfully, I own IJR, and I've mentioned this before on the channel. This is an ETF that tracks the Russell 2000, goes hand in hand with the Russell. It went up 5% today, and I think it's smart. You must, and I'm not a financial advisor, so I'm not going to tell you what to do, but for me, I think it's wise to have some small cap exposure, right, via some ETFs that track the Russell, small cap stocks, whatever. For me, I actually own IJR, and I've been buying this one. I don't know how long. It's been at least a couple months. But ever since the 70s, I've been owning and buying IJR, and now it's almost at 100. So that's looking pretty good. And let me know your thoughts. I mean, what do you think is going to happen here with Georgia, with the markets? Are we going to go higher? Are we going to go lower? And another thing worth noting here, I almost forgot to mention this, ahead of the elections, strategists had largely taken hold of the notion that a Democratic sweep of both seats in Georgia would be a market negative event due to the implications for higher corporate taxes and bigger government spending. We actually mentioned that a couple days ago. And Oppenheimer predicted the S&P 500 could see a downdraft of as much as 10%. However, as trading played out on Wednesday today, some analysts noted that investors were instead fixating on the opportunity for more near-term stimulus, fiscal stimulus, in the event that the Senate control swings to the Democrats. So that, again, is why we're seeing that rally. The stimulus, the near-term stimulus, and it seems like, investors, the markets, they're looking past the fact that we could see higher corporate taxes. We could see that which could cut into the profits. So it's interesting. And again, I'd love to know your thoughts down below in the comments. And now let's talk about what I did today. And for me, I had a field day today, guys, with SBE, Switchback Energy. This is one that we mentioned yesterday in the past couple of videos as well. And I was calling it out in the Discord chat today, and I day traded it twice. And this was one of my moves where the timing was pretty on point. And it doesn't always happen like that. Sometimes you get screwed over, but today it was a pretty good day for me, I'll be honest. And I ended up getting into SBE in the pre-market session at 38.75. Ended up getting in right here, out at about 39.65. So I rode that initial pop in the morning for about 2.5%, and you guys can see I clearly sold a bit early. I mean, we ran up almost to $41, and we saw a vicious drop right back to $39. Seems like, we did now that we can see what happened, right? But at that point, I was like, all right, it seems like it's holding 39.10, 39.20, that old resistance from pre-market a couple days ago as well. So that's a good sign. Then we saw a big sharp spike from $39 up to about 39.40, 50. Then I ended up getting back into SBE at 39.60, and then I actually rode it right back up to where the resistance was from the initial pop at about $40.75. So I timed it well. It was a pretty good day. Initial move was about 3%. Then that second move was a little bit less. You guys can see here, or it might have been more. Let me double check. Or it was actually right around the same, a little bit less, about 2.7%. So that's what I did. I day traded SBE twice. And I'm still in Workhorse, which did pretty well today, up 5.4%. And earlier in the day, it was up almost to $25 per share, which you guys can see here on the 4-hour chart. That's actually right around a big resistance, which I think is pretty big. It's pretty critical, at least, for them to break out of that. So we'll see. This is a good move, but we're still under 25, and I want to see it break there. And if it does, I think we could get to 28, and that's where I'm probably going to lock in some profits. I'm in at about $22 right now. And SLV is another one, which is a silver ETF that I'm still in. This is one that I'm in at about $23, and I'm not really looking to sell this one anytime soon. I want it for some exposure to silver, right? And as we know, like I said earlier, money printing is coming. Devaluation of the dollar is coming. It's happening right now, and that's good for precious metals, silver, gold, and Bitcoin too, which Bitcoin, I'm going to make a video on that these next couple of days. Bitcoin's been crazy. Let me know your thoughts down below in the comments, guys. What are you up to? I would love to know, as always. Now, let's talk about some good old stocks, guys. Some good old stocks, with number one being Exxon. And have you guys seen crude oil? Crude oil's been on fire. I mean, crude oil's been crazy. It's recently just broke back above $50 a barrel, and it's been doing well in terms of, these energy companies have been doing well because of that. We've seen Exxon up 2.5% today. We saw Exxon up 2.5% today. And the other day, was it yesterday? Maybe on Monday. Let me double check with you guys. It might have been Monday that we ended up seeing a massive pop. No, that was yesterday. We saw Exxon go from 41 to 45, sold off to 43, and today it popped back up to 45. It broke that high from yesterday, so the uptrend is intact. And what we're seeing here on the 4-hour is we're right at a big resistance being about $45. And what are we doing into that resistance? Well, we're uptrending into that resistance, right? This is looking like a pretty solid ascending triangle, right? So I think 45 will ultimately break. I think that's where we're going to see a massive move in Exxon, probably back up to about $49, $50. That's the next big resistance that I'm personally seeing right now. And at that point in time, that from here up to 49, that could be about an 8 to 9%, 10% profit potential. And I've been buying Exxon, not in my trading account, but in my long-term account. I actually added a good amount of shares. I forget exactly how many, but I have a decent amount of shares there. I've been buying since the 40s, 42, and I'm actually looking to buy more tomorrow. Honestly, I have an order in for tomorrow. We'll see if that ends up filling. But yeah, Exxon stock number one. And stock number two, well, these are two stocks, the banking stocks, JP Morgan, Bank of America. These are both worth watching, although they are at highs right now based on this 4-hour chart. They are spiking up like crazy, but they're worth watching nonetheless because there's a lot of momentum. So if we see a pull down, maybe to 125, 126, that could be something worth picking up. And we have earnings coming up here on the 15th of this month. So about nine days away, we have earnings on JP Morgan and Bank of America as well. We have earnings coming up on the 19th of this month. So 2 weeks away roughly from now. And it went up 6% today. So banking stocks, guys, with stimulus coming in, and that's pretty good for the people, obviously, the American people. And banks are liking that here in the short term. We're seeing that big spike. So watch out for the banking stocks. BAC, JP Morgan. You could go maybe with Wells Fargo, but I don't really like Wells Fargo, although it did go up 7% today. These are all worth watching. And the next one is going to be ticker symbol SPCE, also known as Virgin Galactic. And this is one that is right at a big breakout point, in my opinion, right? We closed under it, but for tomorrow, the next day, maybe next week, this is worth watching to see if it's going to break out of this point. And that point is right around $24.70, right? Right around $24.70, $25. This is a resistance from back in the beginning towards more like the end, actually, of November. It was also a resistance back in the end of October. So I think the next gap to fill, and if we break this 50 SMA and the 180 SMA on the 4-hour chart, is going to be up to about, let's say, $27.60, maybe above that $28. And if $28 breaks, maybe if $29 breaks, we could be going up to the 30s again on Virgin Galactic, and I think it's getting ready. I mean, it's been consolidating for the past couple of days. You guys can see it here on the 5-day 5 minutes, so watch it. If it breaks 25, I think there's some headway there. And another one here is AAL. This one's down a good chunk, about $3-ish from its peak, down about 17%. We're holding that 180 SMA 4-hour chart, although we are still downtrending under that 50 SMA on the 4-hour chart. And if we zoom in a bit on the hourly chart, we're still under the big moving average on this chart as well. So I'd like to see a break out of there. But once we do, if we do, and we get into $16.50, maybe $17, that could be a nice momentum play. Maybe back up to $18.50 where we were back in the beginning of December. So watch out for AAL. UAL is another one, pretty similar in pattern, right? It's uptrending. It's pulled down a bit, down about $8 from its peak, down 15%. And it's still, despite its uptrend, it's still in a downtrend at the same time. So we have to see what it does at this point, at this wedge, in this wedge that it's in. I think if we break out to the mid-40s, 45, 46, this could be a big runner. It could be a runner back up to 50. And mind you, this has earnings. UAL has earnings on the 20th, right? Same with LUV. They have earnings coming up. I believe here, let's take a look, on the 21st, and that's in the same similar type of wedge pattern. So watch the airlines, the banks, the energy stocks. I'm loving them. And NEO and Alibaba as well. They both got clobbered today. NEO down over 5%, down 270. And don't forget, guys, on the 9th of January, it is NEO Day, 3 days away. That's going to be very exciting. So watch out for NEO Day. And with today's pull down, it seems like we held $48, $49, this 50 SMA on the 4-hour chart. we held that at a higher low. And in fact, on the intraday chart, you can see it. We actually recovered heading into the close, and we're actually up a solid $1 here in the after-hours session. So I think NEO is definitely worth watching on this dip, maybe for a move back up to 54, 55. I mean, guys, earlier in the day, it was at 55, so it shed a good chunk during the day. It dropped 10% intraday today, so that could be a blessing in disguise. And yeah, I mean, the Chinese stocks are under heat right now. Alibaba, NEO, Tencent, all of these stocks, because we saw 3 other stocks, Chinese stocks, get delisted today. And let me tell you about that. The New York Stock Exchange reversed course yet again on Wednesday, saying it will remove China's 3 major state-run telecommunication companies from the exchange. The decision followed a day of pressure from the Trump administration and Congress after the exchange had decided to let the companies China Unicom, China Telecom, and China Mobile remain listed. That twist came a week after the exchange said the company's shares would be delisted to comply with President Trump's executive order on China investments. So that is putting some heat on these Chinese companies. But again, I think this dip in NEO and this dip in Alibaba, they both could be pretty solid opportunities. But again, I'm not a financial advisor. You guys must do your own research. And honestly, NEO is more attractive, the chart at least, than Alibaba. I mean, Alibaba at this point hit a lower high under that 50 SMA, went down 5.3% today. It seems like it wants to test 225, but the second it breaks that, if it does, we're probably going to be testing those lows again, maybe 215, 210. So watch out for that. This one is not out of the woods. In fact, I mean, it's downtrending still. So, yeah, watch out for those two. Very important. And we have a couple other ones here, guys. Aapl, Aapl, like we said earlier, tech stocks, the big ones, the big boys, the FANGs, they are under attack, right? We see Aapl down 3.3% today. And it seems like on this hourly chart, we are testing 126 for the third time, right? We hit that level a couple days ago on the 4th of January. We hit it earlier today at 126, and yet again at the close of the market, and now after hours, we're testing 126 again. So is this going to be a triple bottom breakout, or is this going to be a potential descending triangle? That's kind of what I'm seeing here as well, to be honest with you guys. Maybe it's a descending triangle. Look, we're making lower highs into the support at 126. Are we eventually going to collapse under 126? Maybe go back to 120? Maybe 115? I mean, that could happen. That could very well happen. And honestly, I'm not opposed to it. I would love for that to happen because the truth is, I'd just add more Aapl shares at that point in time. So watch out for the dip here in Aapl. But again, be mindful of that descending triangle that could be forming as we speak. And Corsair Gaming, CRSR, did well today as well, up 5.5% today, held that 180 SMA. Seems like it held the higher low. We're popping back up, but we're about to test the 50 SMA. And I think if 50 SMA here can break, I think Corsair's free sailing straight to $42, maybe even higher, right? And we can see last time it broke $42, we actually went above 42, obviously. We went to 48, and then we went to 52. So I think Corsair is worth watching on this, 37, 38 level. And quite frankly, I'd like to see it break 38 into 39. And from 39 to 42, that is where I think we could see that gap fill. But be careful, because back on in the beginning of December, we got rejected at 39 and we dumped. So I don't want to get caught under that. So I'm going to wait for the breakout on this one. But overall, I like it. CRSR. Upwork is another one. UPWK. I also like this, but be mindful. And you guys know I call out a lot of head and shoulder patterns. be mindful because this could be another one in the making, but it could also not be. It could also be a breakout. We just have to see what happens here on Upwork at $36. Is this going to be the neckline of the head and shoulder? That would mean, okay, we get rejected here, and then we dump off to make the right shoulder. Is that going to happen? Is that what's going to happen? Or are we going to end up breaking the neckline out of 36, this 50 SMA as well on the 4-hour chart, and maybe up to 37, 38, 39, 40? Is that going to happen? And if that happens, we'll be able to go long on it. But be careful because, again, it hasn't quite yet broken out of 36, 36.50. So be careful with that one. And DBX is another one. Dropbox, yet again, another one of those YouTube stocks, right, guys? This one's looking pretty good. It's finally cooled off a bit from $25. You know, it got hyped up a bit there, cooled off a bit. Now we're holding the 180 SMA 4-hour chart, and notice how overall the trend has shifted. I mean, we were downtrending for months in this downwards channel. We hit $17. We broke out of it at $20, and that's where we saw the big explosion up to $25, and now we're right back to $21, right? So this is going to be a huge test. I think if we can hold this level at 21, 22, and break out, I think we could go back up to 25, no problem on this one. And heck, people have been saying Dropbox $30, Dropbox $35. I mean, take a look on this 3-year chart. If we can break 25 in general, we could be seeing levels that we haven't seen in years. I mean, 26.50, 27, 28, 29. So watch out for Dropbox, DBX. SPLK is another one I got requested. This is Splunk. We actually called this one out a couple weeks ago. Didn't really pan out. I mean, it didn't break out like we thought it could. We actually got rejected at the resistance of this downwards channel. We're actually selling off pretty aggressively. Today we went down 3%. So I wouldn't force a long position on this quite yet. Honestly, I think it could go a little bit lower, maybe 150, maybe 145 at the lowest. But once we do break out of this downtrend on the hourly chart especially, that is where we could consider maybe a long position. So be careful there on SPLK. And the last one here is Opendoor. Went up another 5.5% today. And on the 4-hour chart, what you guys are seeing is we took out that 27 level. We talked about that yesterday. That's a very good sign for everybody that's long this stock. That means momentum is getting us out of that big resistance. And at this point, I honestly think Open could go back up to $29, $30. I think that's the gap that's going to fill, which means from where it is now, there could be another 7-8% in the tank. But we could also pull down a bit since we are getting a bit overbought. Maybe we pull down a bit and retest $26.50, $26. We'll see how it goes, guys. So overall, that's it. Hope you all enjoyed the video. If you did, hit the like button, subscribe to the channel. Make sure to also, don't forget, this is huge, guys, join the Discord chat and the Facebook group. Those are free. And don't forget to also get your 4 stocks from WeBull valued up to $1,600. All you have to do is deposit $100 using that link down below to get those. And you could also, on top of that free money, you can get even more free money from M1 Finance. All you have to do is use that link down below yet again, deposit and open an account with them, and you get $30 for free. So I'll catch you all in the next video. Thanks for watching. As always, keep crushing the market. Stay safe out there, guys,